Hi, everybody. Let's have a great week. Everyone doing okay? Just having a little trouble with my Skype. So we've had 3 weeks of dollar decline. So we're in a situation where if you've taken advantage of it and you've booked it, it's tough now. So you've heard Blake talk about markets being too overbought to buy and too much momentum to sell. We're kind of in the same position here with the dollar. I want to be patient and wait for some type of rip. Thought we might get it with the delayed vote in the UK. That hasn't happened. But there is in the pound, if you're a riverboat gambler, we're starting to get some non-confirmations on this rally in the pound. So I'm thinking that perhaps a lower vol way of taking advantage of it might be what's happening right now in euro pound or in the next couple days, because look at where we're at. We're past the 78.6. Unless we're just going to blow through this number, we're probably at 88 or so in here. And I'm not saying that we're going to have a big bull market, although that's what the weekly RSI, this is kind of an aberrational thing you rarely see. And that's why I thought, we would just get a correction, maybe back to.
Hey, Coach, we're not seeing your charts, buddy.
Oh, how about this now, Blake?
Yep.
Okay,
yep.
Thank you.
You're welcome.
All right, so anyway, that's a pretty deep retrace. So this high up here was confirmed. Be pretty unusual if it just turns into a bear market, because markets normally, well, there's nothing normal in the markets, but it's unusual for a market to spike like this, confirm the high, and then just fail, take out these lows. So maybe lower vol way of taking advantage of, if you think there's going to be a correction in cable, might be trying to pick up just for a reaction, because that's all you should be looking for in any foreign currency right now are reactions, because I think that the deal has been sealed, and I don't think that we have any kind of low, significant low, at least till 96. And there are a lot of people talking 95, and I could see 94. And I've even seen some counts, unless you're a super bear, of the market trading down to 92 into the spring of next year. And then we get a failing rally if you're a dollar bear. So this is not going to be the bottom, even if we bounce. So that tells me we get any kind of pop and the dollar rallies back towards 98.20 to 60. That's a selling opportunity. Okay, any questions on that? Okay. Okay. Good morning, Monica. And I was thinking about this with the dollar being as weak, and people that I'm kind of neutral, waiting for lower numbers to step into the long side of gold. I just don't feel like I want to short it either. But I am asking myself, with the dollar weakness we've had over the last few weeks, it doesn't seem to be really adding any type of impetus to the upside in precious metals. So the silver looking better than gold. So this gold silver ratio is probably still trending down. Yeah, pretty negative day here. So we've had this bounce. There's a daily. It looks like it's rolling over. So we've been chopping around. And if this is true, this means that silver's your preferred long and gold's your preferred short. And the last two charts I showed you, the technical structure in silver is much better than you have in the gold. And just to wrap it up, I've been looking for a little pullback in yields, and instead all we're doing is moving sideways at this 180 level. I do believe that eventually we'll take out 190, but that's why I'm pretty keyed in on the yen here. I mean, the yen keeps, Blake pointed it out. Keep thinking 50 is a big number, but it keeps trading on both sides of the 50. And I guess the last thing to talk about is the big question is, can the S&P blow towards this megaphone line? There's a lot of megaphones. Here's a short-term one on the 4-hour, and everyone knows what the weekly one looks like. So, all the talk I hear about are new highs, and I tried a couple of shorts last week. They both worked. I'm flat right now because I thought we were going to have a vote in the UK, but I'm almost tempted to try it again up here and maybe just risk the highs of last week. It's not going to take much for a 2-week reversal in S&Ps if we don't get any follow through. Closing back under 29.8160 by Friday would be a 2-week reversal. So those are just a few of the things I'm looking at right now. And here's something that you guys should be looking at. This. Are you guys looking at this? Are you acting on it? Are you putting these talented traders to work for you for 10 pips a month? One of the best values on the net. One of the strongest teams on the net. The best website on the net. Coverage, content, saving you time from having to do all your, even though, I think it's important we all do our own work. This is time saving. This is the ability to, check your work against people whose work you respect. Sometimes what has happened to me is seeing someone else's perspective has given me pause to take a trade that may have been wrong or would have been wrong, and that doesn't show up in my P&L, but it's almost as important avoiding losses as it is making money. So just having basis of comparison with the different people on our team and what they're looking for. So say you're neutral on gold, but you want to know what the team's doing. So, harmonics are bullish, basic technical, macro. So, I mean, this is a pretty unanimous opinion. This is silver. So a lot of people like it here, and you just go here and check out, like, for example, what's Andre's reason. So he has this harmonic that could take us back to 1860 if we hold here. So, and they have multiple time frames for their analysis too. Has anyone, I see an active pattern. You have both bullish and bearish position on USD yen. Well, that's because it could different time frames. So Greg is bullish, looking for 110.60, and Andre, actually that's the beauty of ForexAnalytix. We don't have a company line on positions that everyone has to toe. Like, say, for example, Blake was bearish yen, that we couldn't have a different opinion, because you know what? They both can work, Enrico, just based upon different time frames. Or maybe one of them works, or both. I don't know. You could find two traders, one bullish, one bearish, and they both work. Or they both could be wrong based upon timing, entry, risk management, etc. So anyway, I think it's a positive.
Good morning.
Hi, Steve.
Last week we had two same trades, for example. So the opposite can happen as well. I had a short DXY position, and Andre had a short DXY position as well.
Okay.
So that can happen as well.
Yeah.
Which gives you, for example, more conviction in this case.
Yeah. In this case, I don't know. Let's see. Who would you go with, Grega or Andre?
Honestly,
yeah.
Nobody.
Because it's the yen.
Yeah, personally, I don't want to do anything with the USD yen. So, I respect both their opinions, and I do see the bearish and the bullish case. And that is exactly why I have nothing. I want to do nothing with it, because I do see both the bearish and the bullish case, and I have no conviction about either of the directions.
Okay, so I hope that answers your question, Enrico. So that must mean you're a member if you're able to see our active patterns in play. Okay, so that must mean that you're getting some great content. How long have you been a member? Let me interview you. You come in on the last promotion? A few days? Okay. Well, let me advise you to give something 90 days to make a valid judgment. Last promotion? Okay. You enjoying it? And it's always, there's no such thing as a silly question. Okay. Don't be, don't hold back. That was a good question. There's only silly answers, which I provide most of the time. So, okay. All right. Anyway, welcome to our trading community, Enrico. And Blake, how are you today, my trading warrior brother?
I'm good. I'm good. And I'm going to expand a little bit further on that idea
Question?
or that question that yeah, we had two
Okay.
two yen patterns in play. One of the things when myself and Steve and Stelios, we formed ForexAnalytix, and we talked to all the team members as they were coming on. It's like, look, we don't want you to be influenced by anybody else's opinion, specifically ours. Like, if you have to call what you see, and that's important, because I want everybody that's reading our analysis to know that we're all independent thinkers, and we're not all gonna, as you put, we're not all gonna toe the same line. I don't send out a message saying, look, I'm extremely bullish the dollar. I only want bull dollar, patterns in play. That's it. I don't do that. We, like, when we blog.
Many do.
Yeah. And when we blog, we're like, okay, hey, I'm just using an example. Yeah, I'm bullish the dollar. I'm going to write a bullish dollar blog. Do you guys have any opinions, in that realm, or do you take the opposite side of it? And then our blogs will be, either we'll have a lot of conviction, or we might have, like Andre might say, well, I have a alternate, just in case the dollar reverses. Great, let's post that. And it because you're exactly right, Coach. It's all about time frame, and it's about how you see it. And frankly, Elliott wave and harmonic analysis can be counter trend. They can be with the trend too, but they can be counter trend, to show reversal areas as well. So, and if you see conflicting patterns in play, then that should really give you a pause and say, okay, wait, should I even be trading this? Let's read the analysis, and which one fits the narrative and the time frame that I'm looking for. And that's also important. And if there are going to be, I've been on the opposite end and receiving end of Grega's patterns in play. Specifically, I remember several times where I'm like, crap, I'm long the dollar and he's short the dollar, and then I'll end up getting stopped out or invalidated or whatever, and I'm like, dang, but that is trading. I mean, and I know this much. I respect my team enough that if their patterns are counter what I'm doing, I have to take a look, and I personally second guess myself and say, okay, maybe I should tighten my stops. I wasn't seeing that. And I might still have conviction on what I'm doing personally, but I might be a little bit more careful about what I'm doing, because patterns in play, one of the things that I try to explain to people, it's not a
signal. It's
not a
guideline.
signal. Yeah. Some people trade them, like just trade them.
You want to take the charts, bro?
Oh, no.
Okay.
No, well, I'm joking.
Okay.
some people trade them specifically like that. That's like, you know, what they do, and that's fine. I mean, if that's what you want to do, I don't suggest that. I think you should use the patterns in play as more of a general guideline of what direction we're looking. And you know, that's the way I view it, is if I like, if you look at my analysis and you go, wow, I really respect what Blake is doing, and I've been listening to him for years on this webinar and watching his analysis on Twitter and listening to the old Morning Edge webinar that I used to do, and you're like, man, I really like what Blake does. If I have a pattern in play that's active, it's based on some sort of by the book formation that I was looking at, then you should say, wow, okay, you know, he's, for example, you know, I am long the euro, by the way, and you go, oh well, you know, Blake's long the euro, or there's you know, euro analysis, and why is there, and you read the reasons why, and you go, okay, well, you know, he's long the euro. Maybe I should be a little bit more careful, because I was thinking about shorting it. So maybe I need to be a little bit more careful and see what his topside targets are before I short it. Or maybe if you say, well, I'm going to short the euro, I know that he's bullish the euro. I need to be a little bit more careful in how I'm approaching that, and be very selective about my you know, entries and risk parameters. You know, and that's the way if I used ForexAnalytix, because I am if I used it like you guys, I'm just saying that I am a very independent thinker as far as the markets go, and I trust my own analysis because I've been doing it long enough that I take everything that comes in, especially patterns in play analysis. I like read Polly's analysis and Amanda's analysis in the mornings when, you know, I get up. I because they're the ones that are posting throughout the night. I'll read it, and I go, okay, you know, why are they thinking this? And you know, should I be a little bit more careful because I might be, you know, counter the trend? Or if they're going in the same direction as me, I say, okay, well, that makes, you know, makes me feel a little bit better about what I'm doing. So that's how I use ForexAnalytix personally. And if I was, you know, if I was a user using ForexAnalytix, I would use it that way too, because once again, I do, you know, I trust my own analysis. I've been doing this long enough. I've been making money in the markets long enough, living off the markets long enough, that I can, you know, I use their, you know, the analysis that I read on ForexAnalytix more as a confirmation, and also what I didn't see. And then that's personally, for me, the value of ForexAnalytix and the community, because there are so many great traders in our chat room that's exclusive to ForexAnalytix, that, you know, they point out like, hey Blake, maybe you didn't see this this trend line, or, you know, hey, did you see that that divergence in that pair? And that really helps me out, because I can't see everything there, and I've been doing this for a long time, and I miss stuff, and I go, wow, I didn't see that. And sometimes I'll like, you know, see some analysis in our chat room, and I'll write analysis in the in ForexAnalytix, and I'll say, you know, hey, you know, the analysis that the look at this trend line here, you know, thanks to you know, Nitish in the chat room for seeing that and posting it in our chat room, and I'll you know, reference them in the analysis, because it's something that I wasn't personally looking at. And that's, you know, that's the real benefit for me, is having so many different eyeballs on the markets, on all the instruments that I'm trading. That helps out a lot. So anyway, I just wanted to expand on that a little bit. So let's say, so what's up, man? Coach, you sound tired. It's Monday, huh?
Yeah,
I
I'm good. I'm good.
Yeah, I woke up, I actually went to bed really early last night and woke up. I actually had a great night of sleep. So it's starting to finally cool off over here, which, you know, whenever it's cooler, I tend to sleep a little bit better. I don't know about you.
You know, I think it's mainly when I find myself, you know, really scanning hard, looking for trades, it's kind of an indication to me that there may not be anything for me to do because, you know, you have that voice in your head. I need to find a trade. I need to find a trade. We're kind of like programmed that way. And if you're searching for one, you know, maybe, you know, based upon the methods that you use, there's nothing there. And you just have to sit and wait for things to develop, which is
Yeah,
the hardest thing for people to do, including myself.
it's hard. It's really hard. Now, I to me though, I think a lot of clarity came on Friday, and I know it was a scary weekend to be in the markets because you're like, well, you know, everything that the Brexit vote, and you know, I'm sure Stelios has a lot to say about that this morning, which I'll turn it over to him and get his opinions here in a few minutes. But you know, the fact of the matter is the dollar, you know, actually closed below the 200-day moving average, you know, on Friday, and or we closed at the 200-day moving average rather. Was it below? Yeah, we closed below the 200-day moving average, and you know, the dollar looks at risk, and I you know, I had to act on it. I actually had I was long the dollar Mexican peso. I got out of it for a loss on Friday, and I turned around and went long the euro. And I took my cost average in the dollar Mexican peso was 19.25, I think, on my average, and I got out like 19.13, which hurt because not only did I take a loss, but I took the carry loss too. You know, if I got out this morning right where it's at, you know, I would have, you know, saved myself a few bucks. But overall, the dollar looks very vulnerable. And you know, when you're dealing with a big long-term pattern like the dollar Mexican peso, the last thing I wanted to happen is USMCA get passed, which could be as early as this week. You know, and we gap below this triangle, and you know, next thing you know, this thing drops a lot further. So I erred on the safe side by just, you know, minimizing losses and taking my hickey. And you know, that's the thing about trading though. You're going to have gains, you're going to have losses, and the losses, in my opinion, you always want to minimize them as long as possible. There, you know, my stops were below 1905, and I'm like, I'm not going to sit around here and wait to get stopped out. I'm going to go ahead and get out because the dollar looks so weak. And you know, I did turn around and go long the euro, and I was and actually when the market gapped, I had my son's they had a soccer tournament all weekend, so I was actually at the soccer field. My son's playing, you know, in the finals, which they happen to lose. I called this team the Cobra Kai of soccer. You're a karate kid, right?
Oh yeah.
They were ruthless, big, dirty. I mean, it was. I mean, I was astonished that the coaching staff was so dirty. B, that all the parents on the opposing team were so energized about how dirty these kids were playing. I'm like, man. Anyway,
Did you have to restrain yourself from going out on the field?
Our coach our coach got a red card and got ejected, and we got a yellow card on the parents. We got a yellow card for being so vocal to the anyway. That, you know, that happens. The parents got a yellow card.
I never heard of that.
Yes.
Johnny Lawrence is a real Karate Kid. We all know that. Okay.
Johnny Lawrence, sweep the leg, Johnny. No, it was horrible. I mean, any parents out there would be floored. But yeah, anyway,
you're gonna get suspended now.
I picked up some euro from the field actually at
the yellow card was your signal.
Yeah, it was 111.40. I think it was 111.48. I picked up some more euro on a dip, and so, you know, because I knew you guys watched the week ahead video. It's like, okay, you know, you got to buy the stuff on dips. You know, you had to. And so now I didn't buy the pound. I should have. Obviously, you know, it's always, you know, in retrospect, the shoulda, woulda, coulda. I mean, the cable was trading at 29 last night, 29.15 for hours. You could have picked it up there and been up 100 pips this morning, but I wasn't about ready to pick it up and then go to sleep and hope for the best. I didn't feel like taking some sort of loss like that while I was sleeping. So I just picked up more euros, a little cheaper. When it was down here, it was pre-market. It was like 111.40 something, somewhere down here. I think is where we gapped. We gapped lower and then moved higher. So I picked it up or it was like pre-market. Yeah, it was like somewhere down here. Anyway, needless to say, the euro or the dollar still looks weak, and it's really popping up everywhere. I mean, it's not just the pound, and the pound, yes, might be leading the charge right now, but look at the Aussie and look at the Kiwi. I mean, we're extending these gains. The dollar looks extremely vulnerable. The dollar Canadian looks weak. The dollar peso is holding on. Of course, it's going counter what it was going counter last week, but the NOK is getting absolutely, it's ripping its socks off. And by the way, Stelios, a good pattern in play on the US dollar Norwegian krona.
It's a very volatile one, I must say, and a very frustrating one sometimes. But yeah, it went a little bit against me in the beginning, but I think it should be going now. But,
well, the dollar does look, like I said, the dollar looks vulnerable now. Since you're here, and I know Steve is here as well, but Stelios, what's your opinion on what's happening? What happened over the weekend?
Yeah,
because I know you got one. So
yeah, absolutely. Like my ex-wife, I have plenty of opinions. It's a good thing she's not listening here.
Thank God.
So we all went home on Friday saying, what's going to happen on Saturday. The big vote is going to happen, and nothing happened. So before I elaborate on that, let's just get a few things clear, because many people might be confused, just like I am. So some time ago, there was an act, the Ben Act, that was created to force the Prime Minister to ask for an extension in the event of a no deal. So that will basically take a no deal off the table, or at least that was its goal. So that was passed. But then we did have a deal, right, between the UK and the EU. And then what happened? We had the Letwin Amendment, which actually forced an extension even with a deal. So basically, they forced the Prime Minister to ask the EU for a delay until all the relevant legislation, so the Withdrawal Act bill, is actually passed. So it seems that the UK Parliament is intent on asking for extensions until we get something. So that's the reason why we didn't have a vote on Saturday. Now, Boris Johnson will try to bring the vote, I think today or tomorrow, but first is going to have to pass from Speaker Bercow, who can actually deny it. So it's clear as mud, basically, the whole situation. But what I take from this, and I've been saying this in the chat room for some time, all these steps that are being taken, all these developments, little here, little there, this is, in my view, constructive for the pound, because it's removing the no-deal Brexit scenario a little bit further away each time. Of course, it's still a possibility. The possibility is not zero. So it's still a possibility, but I think the probability of this is getting lower and lower. And actually, if you think about it, they've asked for an extension. It should be a consensus of all 27 member countries. And you do have the odd voices here and there, Hungary saying, "Oh, I don't know if we're going to vote." Or
no chance they're going to vote against the rest. Yeah, no chance.
It's going to be unanimous, and that's going to be that. But my view is it's still all very constructive. I've said it before. For me, the amount of the pullback, if you can call it the pullback, this morning when the markets opened, was tiny. It shows to me that the market's still short. And actually, there was a chart on Twitter only a few minutes ago from one of our friends who showed who showed that.
I retweeted that. It's very interesting, actually.
The bearish positioning only marginally changed over the last few days. So if anybody thinks the position is going to change within a few days, I think you're mistaken. This takes weeks or even months for it to really go from one extreme to the other. So in my opinion, if there is a deal, when there is a deal, because again, I stand by that, I think there will be eventually a deal, the short covering is going to be immense. So that's where we are now. We're still waiting to see what's going to happen with Parliament today. If there's going to be another vote, probably will be. And what happens then? Because the situation is, I mean, obviously I'm not there, so I don't know what the split is, but apparently Boris Johnson is close to getting a majority for the vote. I mean, it's really, really close. So we're not that far away from the headline that says, in my opinion, that says, deal done, deal voted. And then what happens? Sterling
300 to 300 pips to the upside,
flies,
easily.
Yeah.
Yeah, at least so.
Yeah. So that's my opinion.
Blake, your friend FX Macro had a very good take on the market many hours before it opened yesterday. He was saying, I happened to read his tweet, that when the market opens, it might dip lower towards 128.50. I doubt it that we're going to get that lucky, he said. But I think that that should be bought, and we actually dipped down to 128.77, whatever it was, and now we are at 130. So yeah, it was a good buying opportunity. And as Stelio said, as it seems, from the market pricing in, like I'm assuming, Stelio, the market should have been pricing something like 80% of a no-deal Brexit until like 10 days ago, right?
I wouldn't call it 80%, but well over 50-50, well over 50-50.
I think, yeah, okay, it might have not been 80%, but as you said, definitely above 50%.
Yeah.
And suddenly the market has to reprice it. And as you said, every single day, it seems that the odds are increasing. And imagine if we do get a deal, right? And positioning, as you said, that's why I retweeted Ures, positioning is still extremely, extremely one-sided. Many people think that positioning, I was saying that yesterday to a friend of mine that was asking, and we were talking about today in the morning, Stelio, positioning is something like a mega tanker in the sea. From the point it wants to start turning until it finally manages to turn 108 degrees, you might need miles and miles to do it. And the same thing with positioning. I mean, you might need many weeks to get an extremely short positioning to long or neutral.
Yeah, I think you're right. And remember, it can go from negative to neutral to positive. So just remember that. Remember that. All right. Well, like I said, the dollar looks pretty vulnerable here. There was if you look at the dollar index, I just want to reiterate that we're coming out of an ascending wedge, and because we're coming out of an ascending wedge, I said this during the week ahead video, the risk is that at least the 38%, which takes us closer to 95 on the dollar index, which is still quite some distance away from where we go, and we could definitely surpass that too. So if you're long the dollar, you just have to be very, very careful at these levels. I know that the natural inclination for most traders, not necessarily longer term traders, like traders, intraday traders, is, oh, everything's overbought or oversold, I'm going to fade it. You got to be really careful, because we have been compressing volatility for so long that these moves are going to these moves might really ignore a lot of the technical indicators that you see, especially if they start going, if the momentum really starts picking up. And this is where you could, if momentum really starts to pick up here soon, you might be at risk of blowing out your account if you're not careful, right?
And as we said last week, Trent already warned us, a lot of people out there already blowing up their accounts, trying to fade pound strength. I mean,
Short.
really,
Yeah.
Please don't do that to yourself.
Just be very careful. If you get in a trade, manage your risk, especially if you're going counter trend. Keep stops tight. And whenever you're going counter an intraday trend, especially right now, make it smaller. If you're going to do it and you want to take a pop shot at something, take smaller positions. Don't go, I hate using the terminology, all in. When you have really strong trends going against you. So anyway, well, Steve, I left you a lot to talk about.
Yeah, absolutely. I do have a lot to talk about.
Yep. I want to say good morning to everybody and happy Monday, and I'll be here all week. So we'll see you guys very soon.
Thank you, mate.
Thanks, guys.
By the way, needless to say, we were discussing today in the morning with Stelios that the same thing that happened with cable, a lot of people are in danger of blowing up their accounts for the same exact reason in the Euro USD. The Euro USD hasn't, produced this type of a move that we've seen in the cable, but I do think that, it has a few resistances to clear more, but once it does that, it might produce a huge squeeze there as well. And we know that positioning is equivalent in the euro. So that might really be a double whammy for people that are, outright dollar bullish and, they're just trying to sell every rebound on every currency against the dollar. So you should be very, very, very careful. Anything else, Stelio, that we had, besides the usual Brexit saga?
Well, just one thing on the US-China front. We hadn't really been talking about that in the past few days because we didn't get much. But U.S. Secretary of Commerce Wilbur Ross did say, I think earlier today, or was it last night? I can't remember that they're not bound to a specific date. We're talking about phase 1 trade pact with China.
Oh yeah, that he doesn't care if it happens on November. So already, they're trying to keep the possibility on for a delay there, as long as it happens properly, and that the vast majority of the important parts of the deal are going to be in phase 2 and phase 3. So go figure.
Exactly. It's just more, one day Trump says, we're very close, we're really this, and then the other day they say, no, we're not in a hurry, we want to make sure everything's right. Of course they do, but it's just
I think they're not stupid enough to try to produce a deal. I think that they figured out that between the choices that they have on the table, probably showing that there is progress, but making sure that it gets delayed enough so they don't actually have to produce a trade deal and say, okay, this is the trade deal, this is what we're signing, that's it, that's the story. I think that's going to be a disaster. So that's why they will try to avoid making that happen for as long as possible. If possible, even after the elections.
Yeah, that's the ultimate goal, But apart from that, it's been a pretty quiet weekend, actually.
Okay, nice. Actually, let me start. I have a few things to talk about besides the obvious, of course. Having to do with the USD NOK, I was watching it today again. Still a nice probability of an ascending wedge here. I think that if we manage to clear 905 to the downside, that's going to be a quite nice indication that your pattern in play is going to be doing, much better. I think that, we should be retesting 890.
Yeah, I was going to say 890 is a real test. Absolutely.
Yes, it is. It is. It's going to be a very important zone, 890. And I do think that we're going to see 890 as long as we end up closing below 905. It doesn't have to be today, of course, but once we see a daily close below it, I think that 890 should print, in the days to follow. So nice, nice reversal from there. Let's see if this is actually an ascending wedge. Because if this is actually an ascending wedge, that would actually, from a technical perspective, imply a possible return down to 850. So that we're talking about a potentially huge move there. But one day at a time. Let's first see that we can clear 905, which is going to be the first hurdle. And following that, one level at a time. So yes, this was one of those that were in my radar. Another one is silver, and I'm starting from those that I know that you keep close track to, because silver, of course, we need to wait for the end of the day. Silver is currently trading above this pennant. Right on top of the 50-day moving average and this horizontal support resistance area at 1775. So ideally, I would want to see a close, even if possible, above 1775. But if that's the case, that's a nice technical indication that silver might be about to accelerate higher. Now, gold hasn't followed silver yet. I mean, silver is up 135% and gold is, almost unchanged on the day. But definitely, you know, silver leading is not a bad thing, especially we know that how silver tends to overperform when the gold-silver ratio is underperforming. And it seems quite interesting that the gold-silver ratio is attempting to break today below this, you know, channels, this rebound that was channeled. So it's going to be interesting. And I think we might be at the start of another move higher for precious metals. I'm pretty sure you have no objection to that. I don't have it.
None whatsoever, my friend.
Yeah, same here. On the other hand, crude still, you know, trading water here, consolidating, stuck between 50.5 and this horizontal support resistance area. Where is it? It's 54.50. So might be a bear, you know, might be a bear flag, but it's, you know, it's not that certain. I mean, price action is very choppy, so I'm not really trusting it. So I have to say that, you know, it's been several days since we can actually say that we've had something to talk about here in crude, but I know that people keep watching it. So, you know, resistance at 54.50. If we break above that, we have the confluence of the 50 daily moving average and the 38.2 at 55.77. So that might also do the trick. But so far, as I said, the best assumption that can be made is that perhaps this is a bear flag. Having said that, you know, moving lower towards 50.5, that might prove hard to crack. But if we do crack 50.5, I think that, you know, crude is done. It should be moving a lot lower from there. We've been stuck with that support, you know, holding since back in the beginning of June. And, you know, we've tested it several times. If we manage to break below it, I do think that we're going to see continuation lower. Of course, if for some reason we get a risk to sour, so if we do get a bearish move out of stocks, that should also help crude move lower. But for the time being, and that has to be said, the S&P is unfazed from the move lower in the dollar. It is unfazed from, you know, all the risk we have around. Remains above the 2960 area and certainly remains within this ascending wedge, which, as I was saying the other day, if you were here, I think I was mentioning that on Friday, it can end up breaking either way. I would be much, much more bearish if the inclination of this wedge was a lot steeper, because we know that steep ascending or steep descending wedges are almost always terminal formations. But, you know, since the inclination higher of this wedge is, you know, very slight, very, very low, it can actually end up breaking to the upside, right? And producing another rally before it finally, you know, surrenders and, you know, starts moving lower. So I have to say that I don't really have a bias here. We're more or less a little bit higher than the middle of this ascending wedge. So you have to respect, you know, the levels. 2960, then, you know, wherever this line passes from currently, let's say 2925, definitely 2860 is going to be the line in the sand. I mean, even if we break below the wedge, I can understand why somebody would want to be a little bit more conservative and say, I want to see a move below the 200 daily moving average and, you know, a lower low, in which case, you know, if you want to be more conservative in being short, since, you know, you want to respect the fact that we've been in a multi-year, in the longest uptrend we've had in history, in essence, then I would understand why somebody would want to wait for 2860, although that is why you always have the option of scaling in and scaling out of the market. So if you want to be conservative, for example, you might just want to sell like 1/3 of a position below this trend line and then sell another 2/3 below 2860, for example, just giving an example. Now to the upside, obviously the first area to monitor is 3022, which, you know, we've tested multiple times and failed. And then a little bit higher, we have this ascending wedges, trend line resistance, let's say roughly 3050. So the two resistance areas above us are 3022 and 3050. Okay, now in between, I consider more or less everything that happens in between these trend lines to be noise. So my point of view is don't get trapped, in getting chopped up in noise, because we might end up having noise for, even a few more weeks to follow. But I do strongly believe that, we're going to have some type of a resolution sooner rather than later. Now, eventually, I'm on a personal basis 100% convinced that, we're going to be entering a bear market. I think no better indication than this prolonged divergence that started at the end of 2017 in the VIX. You've seen that, we've had a series of higher lows in the VIX since the end of 2017. So in essence, in a few days, it's going to be 2 full years that the VIX is going to be diverging, an obvious bullish divergence, right? And I do think that this is something that, can help you time the big reversal in the market, but it's something that you have to keep, in your mind, because I do think that this divergence is going to prove to be, a good, an honest indication of what's about to happen. But as you've seen with divergences, and this is a good example, they are one of the indicators that you might want to use to get a direction of the market, but you should not only be trading based on them, because if, for example, you only traded on a divergence on the VIX, you would have blown up your account many times already since the end of 2017 until today. Okay, but once you get several indicators, price action and everything else in alignment, and among those you also have this divergence in the VIX, it gives you more conviction of where the next big move is about to take place. That's why I actually placed a bet a year ago almost with our friend Ures that we mentioned, who is a very good trader. I told him that in my opinion, and we bet a dinner on that, we're not going to see single digit VIX again during this business cycle. He thought we would. I feel pretty good about this bet. Now, I have more things to talk about, but let's first cover your questions. And if we do have time, I'm going to go over them. If crude falls, won't that affect USD NOK? Yeah, it will affect USD NOK, Catherine, and that is a good comment. Falling crude oil should affect positively USD NOK, but don't forget that crude's influence on USD NOK is going to be less than the influence that the dollar is going to have on USD NOK. So between the two factors, USD and crude, USD will have more of an influence on what happens with USD NOK. Plus, as long as we stay above 50.5, there is no reason to be certain that crude is going to actually break through that area, because if it does break through that area, I'm pretty convinced that it's going to move a lot lower. But it's an assumption that we're going to move down there and then eventually break below it. Until that happens, we're still trapped in a rather large range, in a rather large triangle between 50.5 and where does it pass now? From 60 to 70. So it's a rather large area. I mean, we can even end up up. I mean, we have a resistance here, then we have another big resistance at 58. So, if for some reason crude wants to, move higher from here towards 58, that will also help USD NOK, move lower. Anyhow, not easy to read crude at the moment. That's why I haven't traded crude. I traded crude a lot until several months ago. I mean, I had several trades in crude and I did, very good last year and at the beginning of this year. But I haven't traded it lately because it's very hard to read. So, I'm not going to assume what's going to happen to USD NOK on crude, because I don't find easy to read crude unless it breaks out of that. I can tell you what I find easy to read through, though, and that is the DXY, because the DXY has already broken through that trend line we were talking about, and the continuation lower we've had seems quite impulsive to me. I do think that 97.70 is going to be resistance from this point on. And I do think that if we also break through this channels support, that's going to be a very bad omen for the dollar, and probably we're going to see a lot more weakness from there. So I'm pretty bearish the dollar, and I'm going to be even more. I still have 2/3 of my initial short position. I closed 1/3 at 97.70. I still have 2/3, so I'm still holding short the DXY, and I'm probably going to add if we rebound to 97.70. Now a break below 96.65, I think opens up a lot more downside from there, because the big picture here is this one, right? I mean, the first indication for me was the break below this ascending wedge you see here in purple, and the fact that we ended up retesting that several times, 1, 2, 3, 4, and we failed in every single occasion. And then after breaking through that ascending trend line support, that's when I knew that, you know, this is where I want to be, short the dollar. And if we break through that trend line as well, I will want to be even shorter the dollar. As simple as that. My pleasure. What's your opinion on pound pairs? My opinion briefly is what we said before. I think there can be a much bigger squeeze coming in the pound pairs. Now, if you were not long pound, you have a problem here, because you have that ticking bomb in you. It's human nature, not you specifically, that tells you, oh, look at that move, and oh my God, I didn't take advantage of that. Oh, how the hell am I going to take advantage of that? The answer is you won't. You won't, because there is a very good chance that, you know, the pound is moving higher from here, but is there a risk reward for you to be buying the pound right on top of a confluence of resistances, for example? Because 130 is the confluence of this horizontal support resistance area. It is a psychological level. It is also the 78.6% fib of that last move lower. Actually, it's not. I hadn't drawn it right, so forget about that. Anyhow, it is a horizontal resistance area, and it is a psychological level. Okay, so would I be buying pound at on 130? No, I wouldn't. No chance, right? But do I think that, you know, there is a huge danger that it's going to squeeze higher? Yes, I absolutely do. And I think that if for some reason we get a move lower to retest a broken wedge, this is the wedge I'm talking about here in purple. If for some reason we get that opportunity, it's going to be a great buying opportunity. Unless, of course, you know, we get some type of a development that is extremely bearish, like, you know, things seem to be working out in the right direction, and suddenly we get like some solid proof that they're working in the exact opposite direction. Then and only then I wouldn't attempt to buy a retest of this wedge. In any other scenario, any, in essence, orderly move lower towards there, personally I'm buying it. As simple as that. I mean, I can't make it simpler than that. Now, having to do with the other pound pairs, which we can briefly have a look at. If I find them, of course, there they are. Okay, pound Aussie. Pound Aussie, as I said last week, I would be a little bit careful here. Look at this trend line. I mean, we've been in an expanding wedge since March of 2018, and we got rejected from that same trend line once again last week, right? So although the price action that has followed that rejection is rather bullish, because look at this, we've had an inside day, and today an inside day to an inside day that looks like a consolidation. And in consolidations in general, you should respect the previous trend, okay? And we have held the first area of support that we found, which is here at 187.30. You know, I would be a little bit careful against that trend line. If we break above that trend line, I think that we're going to squeeze a lot higher. For example, I think that we can easily make it to the 161.8 of that last move lower, which is at 197 in essence. Now, having to do with pound Kiwi also found resistance at this confluence of resistances, but keep in mind that pound Kiwi remains in an ascending channel, And this ascending channel's resistance is actually quite a lot higher from here. I mean, currently passes from like 212. So, I mean, I don't have any real argument why you should be selling those. I mean, I had a good argument why they might have stalled last week where they did. But as I said, the following price action, you can also see it here in the pound Kiwi, isn't one that indicates a reversal, right? It's just a bullish consolidation, most likely. And now having to do with the pound yen, there you go. I mean, pound yen now above the 61.8 would have been a nice opportunity to rebuy a pullback, towards 135.60, but it doesn't look very likely that we're going to get that. So, that looks quite solid as well. I mean, and upside resistance is 142.70 and 144 following that. And as I said, don't underestimate the capability of the pound to squeeze even further, people. We already told you that positioning has changed very slightly. So positioning is still overwhelmingly short, okay? And you have to take that into account. And what I was saying before, and if you want to see it on a chart, the same type of problem exists in the Euro USD. A lot of people very, very bearish the Euro USD, but the Euro USD has started breaking one resistance after the next. It initially broke through that intermittent descending trend line resistance, which constituted, a smaller wedge here. I mean, it was the resistance of this smaller wedge. Now it has broken above this trend line that dates back to the start of 2018. And we now have one more trend line to monitor, one that dates back to September 2018, which is at 112.30, while a little bit lower at 112.10, you find the 61.8 of the last move lower and the 200 daily moving average. So guess what? Once we start squeezing through worst case scenario 113, this market can really go vertical. Trust me when I tell you, it can really go vertical, completely ignoring what you believe the fundamentals are. I mean, we can have an argument about the fundamentals. Those of you that listen in, my opinion. I think there is no economy worse positioned at the moment fundamentally than the US. The US is running an 8 to 9% deficit while we're still typically and theoretically in expansion territory. I mean, the balance sheet of the US is way worse than any balance sheet we have in the Eurozone, way worse. But even if you completely want to ignore that and you believe that fundamentally the US is a lot more sound than Europe, even if that happens, even if that's the case, once we start squeezing those overwhelmingly short positions, it won't matter at all. Fundamentals won't matter at all, because the market will then, it's going to be like a pot that, it's boiling and it has a lot of steam in it. Once you lift the lid, all that steam has to go out. So think about it like this, okay? So, try to ignore whatever fundamental biases you have if that's the case, and not blow up your account, because as I said, positioning alone can really make this fly above 113. Okay, more questions. Ozzy, yeah. Now, the generalized fall in the USD is like the tide that lifts all boats. Okay, so the Aussie and the Kiwi have definitely underperformed the moves we've seen from the euro, and especially from pound. But they are getting the rebounds that you should be seeing when dollar falls in general. And having to do with the Aussie, we're currently testing the previous. We've already made one move. We've broken above this triangle. Okay, now we're testing another level, which is the previous high. So also the 50% flip. So it's a confluence. So above this 68.80 level, then we have another confluence, which is a lot more important. This descending channel's resistance and the 200 daily moving average. So I'm pretty sure that once we break above 69.50, that confluence of resistances, the Aussie is also going to squeeze higher. So it's a matter of if we're going to make it there or not. Because if we make it there and we then breach through that area, I think it's going to be the beginning of a bigger move. Same deal here with the Kiwi. Kiwi is back testing once again the confluence of the 38.2% fib. And as you see, this horizontal support resistance area is quite important. I mean, acted as resistance here, acted as support there, resistance, support, etc. So 64.25, we're very close. We're like 20 pips away from that. A daily close above 64.25, I think we'll do the same thing for Kiwi. So as you see, the dollar seems to be in trouble against almost everything, or about to get in trouble almost against everything. That's why I personally don't really see any respite coming in this move lower in the dollar anytime soon. I think that even if this is a corrective move, which it might end up being, it still has more to run. And another example, I mentioned that several days ago. I said that I like this pair a lot to the downside, USD SEK. I also love the fact that it first produced a little false break higher from this ascending wedge. And look at that. The following day, from the day we talked about that, we had this big move lower. I talked about it again then, saying that now we're testing this horizontal support area at 980, 982, and below that, why not back to this trendline support? And as you see, it's been, a constant sell-off since. Needless to say, if we clear this ascending wedges trendline support, that's going to be a lot more downside opening up. So USD SEK might just be at the beginning of this move, right? So bottom line, what I'm trying to say is that, there is a very good chance that those of you that feel that, oh, you've lost the dollar reversal, we might look back a few months later and realize that was the very, very beginning of that move. Hey, Coach.
Hey, buddy. No interview today.
Oh, okay, good. So we have no pressure.
You know what, Steve? I know why. You know how sensitive I am anyway, and how I overreact to everything. But I know why it bothers me when I book a guest and they don't even let me know that they're not coming or anything. Because once in my life, it only happened once, I was stood up on a date. So this brings up all this pain that I went through that night while I was just sitting there waiting for her and waiting for her. And it took me about 2 hours to figure out, oh, you know what? Because, I'd never been stood up before, so it was a new experience. But I'm getting lots of practice here lately with our guests.
I really think you shouldn't take it personally. The vast majority of the cases, it's not a rejection to you or the show, but a lot
Are
of
you
people
sure, man?
But a lot of people just, as you said, they get stage fright.
Yeah,
I know the first time I was to go out on an interview with Blake, many years ago.
Yeah.
Blake had me for an interview on.
Yeah.
I mean, it's not that it didn't cross my mind that I wouldn't show up, of course, because I wouldn't do that. But I have to tell you that I felt like I was getting sick, which is a weird feeling. So I felt like for 10 minutes, and then I persuaded myself.
Well, it's not this guy's on Stock Charts TV, and he's been on Bloomberg. So anyway, thanks for helping me try to rationalize.
Yeah, so I said to myself, come on, I mean, this is completely logical. I mean, worst case scenario, what happens? I mean, you don't sound that appealing to the audience, and you don't come back again. So
you're going to run into them at the bar.
Yeah, there is a Greek saying.
Oh, you are so crappy. On the morning edge, right?
There's a Greek saying, "Ti είχες, ti έχασες," which means, if you didn't have something, you didn't lose something, right? So if you don't go out on the show, you don't have something to lose, but you don't even have the potential to do
Yeah.
something. So
Feel the fear
yeah.
and do it anyway is a book I read a long time ago, and
I totally agree
you have to do
with
that.
that line.
Because you know,
Absolutely.
otherwise you get trapped in some kind of prison because then the fear becomes reinforced, and then it's tougher to overcome it. So, you know, let us coach you, Steve and I. If you feel fear about doing something, just push through that envelope. Your self-esteem will rise, your confidence will rise, no matter what the result was, that you did it and didn't have that emotion contain you from not going out there to try something.
Yeah, and many times you'll realize that, you know, the biggest obstacles we put to ourselves, honestly.
It's in our head. You know, the
Yeah, absolutely.
fear is an acronym is false evidence appearing real.
Yeah, and you know,
You like that?
the influence of you know, our mentality is a lot more powerful than many people can realize. People
Yeah.
that have had psychosomatic effects due to
Yeah.
stress or whatever
Yeah.
know that very, very well.
Yeah.
I mean,
PTSD, stuff
just
like that.
your
Yeah.
mental state can make even your body feel sick in 100 different ways.
Oh, talking
Right.
about mental, when it comes to trading, guys, don't use mental stops, because the last time I used a mental stop, my first stop was a mental institution. All right. So anyway, that's my last piece of advice, and we'll catch everyone for Turnaround Tuesday.
Okay, coach.
Yeah, go ahead, do the tagline. Do it in Greek. Go on, do it in Greek.
Seriously?
Yeah, go ahead. Can you translate it?
Yeah, actually, I think I can. Okay, I'm not going to translate PIP, of course, because, you know,
Okay.
it's like...
Yeah, use
you
PIP,
know,
but go ahead.
Okay, μη μετράτε μόνο τα pips, αλλά μετρήστε και τις ευλογίες σας. There you go.
Amen. All right, guys. We're international, so we'll see everyone tomorrow. Good hunting the rest of the day. Thank you, Steve. See you in members
Thank you,
chat.
coach.
All right.
Bye-bye.
Adios, everyone.